This is an awareness test. How many passes does the team in white make?
Go!
The answer is 13. But did you see the moonwalking bear?
Go!
Hi, welcome to this video, Dave, which is all about avoiding the obvious and basically seeing things that other traders don't to give you an edge for success. And there is an old saying in the market, if it's obvious, it's obviously wrong, and it couldn't be more true. And I've also done a quote from Jesse Livermore on the way in, which kind of reinforces that. And if you could have come in and trade Forex markets, if it is obvious, you need to avoid it. You need to see things other traders don't see or don't look for, just like the moonwalking bear in the TFL video, which I thought was really good. Let's look at it first of all from technical analysis, how most people use technical analysis and use obvious things, and how you should basically avoid the obvious and do something slightly different. Let's take a very simple example. A lot of traders come into the markets, and one of the most popular trading strategies is Fibonacci retracements, buying back to the so-called magical numbers. It doesn't work at all. It's complete nonsense. Markets don't move to science. Fibonacci is just probably the most popular of the scientific methods. There's plenty of others and plenty of systems on the market that say there's order and you can predict the market. If it was that simple, we'd all be millionaires, okay? Now, moving on from those systems, there's a lot of people who want to learn technical analysis for themselves and learn some techniques. And they'll basically learn what I would call obvious techniques. And I'll give you the perfect example. I look around the net all the time and I see numerous videos on breakouts and fakeouts. And they all consist of, you've got a breakout, you confirm it with a candle or not, and that's basically it. It's so obvious, it's just not going to work. If you want to basically trade breakouts, you've got to think about what the majority are going to do. And I use a double confirmation on a breakout, and I would never ever use a single confirmation. That's just my personal way of doing it. But what I'm really stressing here is avoid something that is just obvious to other traders and other traders use a lot. The biggest mistake traders make in terms of technical analysis is defining where their stop should be. Okay, so let's say you've got a breakout, they might put it 10 ticks behind. If they're looking for support and resistance to hold and trade off that support and resistance, it'll be again 10 ticks behind. Traders put stops too close as a group. You need to basically compensate for that. Keep your stop back from the herd, but close enough to protect yourself. And I think stop placement is one of the most important criteria in a trading strategy for achieving trading success. It must never be too close, but it obviously can't be too far away either. You've got to have good money management. And getting that balance is a key to trading success, in my view. I think another major error in technical analysis most traders make is they're too keen to get into trades and don't get enough confirmation. They basically jump in with too little confirmation. Now, I'm not saying that my strategy is perfect or the right one for you to use. It works for me. But what I would say is that I do not do anything that I think is obvious to the 90% of losers. Or it might be obvious to them, but they're not going to use it, okay, in terms of they wouldn't have the mindset to do so. And I think, a trading strategy needs an edge. Now, you've got to keep in mind, 95% of traders lose. So you've got to have an edge over them. And you've got to avoid the obvious and basically come up with your own system, which basically is outside of the majority. It's not hard to do. You just have to look at what the majority do to see what basically doesn't work to come up with what does. Now, the other thing I want to discuss here in terms of obvious is to do with trends in motion. And what you have a lot of the time in the market, and they're the best trading opportunities of all, are when trends really start to run and there looks to be no obvious reason why they should turn around. The trend is strong, the news wires and all the experts can see no reason whatsoever why that trend might change. That is the perfect opportunity to get out the trend if you're in it long or short and bank your profit, or look for a turning point. One thing I love in the markets is when it's, you've got that sort of, this trend can never end and it's going to go on forever. There's no logical reason whatsoever. That is the perfect time to exit or trade contrary. And it goes to the Heidelberg rule of physics, which I saw Bruce Kavanagh quote. And it's the more unexpected an event, the more likely it is to happen. And of course that's true in Forex, because if everyone's looking for something to go one way, it's probably going to come back the other. And I love that Heidelberg principle of physics. And actually just, looking for markets that look like they can never end, and then either getting out or trading them the other way, has actually been one of my favourite strategies over the years. Most traders, though, get blinded by greed or fear, and a huge amount of traders believe what experts say in the news. Well, they're experts in reporting the news, but they're not experts in trading. So you don't need to be intimidated by them. I hope you enjoyed this video. Really what I'm just saying to you is that you do need a simple strategy to win. That's all you need. But you mustn't do the obvious in terms of your analysis. And you mustn't also think, when trends are in motion, that the obvious conclusion is the right one. So thank you very much for watching this video. Take care. Have a good day.